Let's talk about one of India's biggest players in the steel sector, Jindal Steel Power Limited. You know, people often talk about how India is going through a period of rapid economic growth, but what they might not know is that the country's steel industry has been a driving force behind it. And Jindal Steel Power Limited is one of the key players in this sector. The company operates in two main areas, steel and mining, and offers everything from TMT rebars to semi-finished products like slabs, billets, and looms. They're also involved in producing cement, which is a crucial part of the construction industry in India. Jindal Panther Cement, for example, is one of the most popular brands globally. But what really sets Jindal apart is its diversification into coal mining and iron ore extraction. The company has mines located across India and internationally, giving it a unique position to tap into the global market. Now, let's take a look at some of their financials. They've been performing reasonably well in recent years, with a decent profit margin and low debt-to-equity ratio. This means they're generating plenty of cash flow to invest in new projects or pay off debts. But here's the thing, Jindal Steel Power Limited is not just about its financial performance, it's also an attractive investment opportunity for many investors. The company has a strong track record, with consistent dividend payments and a relatively high dividend yield of 21%. That's right, folks, they're paying out over 1% of their profits to shareholders every year. The stock beta is another interesting metric that shows how well the company performs relative to its peers. Currently, Jindal Steel Power Limited has a beta of around 0.98, which means it's performing about 2% better than the overall Indian market. Another reason investors are interested in this company is that they're not just limited to India. They have operations in various countries around the world, including Southeast Asia and Latin America. This diversification can help reduce risk and increase returns over time. But what really sets Jindal apart is its long-term strategy. The company has a clear vision for growth, with plans to expand its product portfolio and reach new markets. They're also investing heavily in research and development to stay ahead of the competition. In terms of stock performance, Jindal Steel Power Limited has been on an upward trend over the past year or so. Their market capitalization is around $979 million, which makes them a decent-sized player in the Indian stock market. Finally, let's talk about the price-to-earnings ratio and the price-to-book ratio. These metrics give us an idea of how expensive investors are paying for Jindal Steel Power Limited compared to its earnings. The P/E ratio is currently around 47.6, which means investors are willing to pay about 4.7 times their earnings per share. Meanwhile, the P/B ratio is around 2.08, which suggests that investors are getting a good deal. Overall, Jindal Steel Power Limited seems like an attractive investment opportunity for those looking to diversify their portfolio or invest in India's steel sector. With its strong financials, diversified operations, and long-term strategy, this company has all the makings of success. This is not financial advice. Please do your own research. Use this information at your own risk.